So that we're now in the largest credit bubble in history, in recorded history. And when this one collapses, it's going to take out the currencies as well. There is no alternative. I mean, you know, when the tide breaks on this one, what does the Fed do? I mean, basically, it tries to rescue what it can because it's got a primary duty to rescue the government's finances, which incidentally is in a debt trap. The deep state, the deep financial state, if you like, in China and Russia. They can see what's going on. And that's why they've told everybody, for goodness sake, protect yourselves. Go out and buy some gold. So you've got all the central banks and even the Polish central bank, who are probably sort of listening in, if you like, buying gold. The only thing which is really going to be left standing is real money, which is gold. And to a lesser extent, because it's not monetized, is silver. And also, if you go back in history, not too far away, and I remember copper in the coins. So, this is real money and nobody's got it.
Hello and welcome back to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the @JR Mining guy over on X, and of course, your host of this channel. And I'm really proud to be host of this conversation today. It is with Alasdair Macleod. He's the founder and brains behind Macleod Finance Substack, and I'm really looking forward to catching up with him. He's a regular on our channel. We have him on about every quarter these days. We've done a bit of a year review and outlook in 2023 for 2024. We're going to do the same for 2024 and 2025 now. And we're going to recap some of the calls he's made and see where we stand on certain things. Interest rates, bond market, US dollar, gold and silver, of course, we have to address. And at the end, sort of as a goodie and as a bonus, we'll talk mining stocks and sentiment as well. Where does Alasdair see things going? I know he's an investor in this space. He's like me, can't get out of it. We have to do endure, or he likes pain. Maybe that's why it is. I don't know. We'll talk about it in detail and how much longer we have to endure some of it. So before I switch over to my guest, hit that like and subscribe button. It's a free way to support the channel, helps us out tremendously, and we do appreciate it. Thank you so much. Now, Alasdair, it is great to have you on the program. It's good to see you again.
It's nice to be back, Kai.
Alasdair, Macleod Finance Substack, 100% committed to the cause here now. Give us a bit of an overview of Macleod Finance Substack. What do you stand for?
Yeah, I mean, basically, I think rather like you, because before going on camera, we were discussing how important it is to educate people. I mean, gold money was lovely. The problem really is that virtually all their subscribers, all the people, customers of gold money were already converted into gold or silver or whatever. So I wasn't really getting the wider audience, and I needed really to start thinking in terms of using, sort of, if you like, modern technology to spread the word and get people to understand what is actually happening to money and credit and to understand the distinction between them. So, rather like Soar Financial, really I'm in the education process, and I think it's desperately important that people do understand what is coming up in the lift and how dangerous things are likely to be. They don't want to get caught, surprised, if you like. And so that's essentially my mission, to, spread the word as to exactly what is going on, help people understand what's going on, and therefore protect themselves, if you like, from a situation which is actually more rapidly deteriorating than they probably think.
I'm sensing it from you as well, Alasdair. There's a sense of urgency nowadays. Like I've seen it sensed it, like not really felt or heard it, but the urgency is picking up. I've had John Rubino on the other day, and we spoke last in March, and and just by his using the words he was using, there was way more urgency in what is happening. So. I want to get to that topic. I'm trying to fit in my icebreaker first because I really want to see maybe open the conversation on a lighter note here and maybe ask you what was one of those aha moments or the moments in 2024 for you that you might not have had on your radar screen or on your bingo card this year, Alasdair. Maybe we'll start there.
I don't think there's anything really. Things have evolved very much as I expected. Where I've gone wrong perhaps is in terms of timing. I mean, timing is always very uncertain. I know that there are people who sort of swear by cycles and all the rest of it to give them timing, but without a sort of a proper basis for that, I just can't see how you can really get the timing absolutely spot on. I mean, I've known this, having been a broker for 50 odd years, long-standing broker, as it were. I know that timing is actually very, very difficult. All you can do is go for value, buy the things which you think are undervalued, and sell the things which you think are overvalued, and do your analysis to get to that point. So when it comes to whatever one expected at the beginning of 2024, I think the one thing I did expect was a deterioration in the global financial situation, which would lead to higher gold prices. And that indeed is what we got. Other than that, I could see the bubble was continuing. It's a credit bubble. And this credit bubble at some stage will pop. I think that we are in the early stages of that bursting, as seen really by the reaction to the Fed statement last night.
We sell gold and silver, but we're also, and most importantly, we're in the credibility and trust business.
We do everything we say we're going to do. We ship timely. We communicate well. It's a nerve-wracking process for many folks, especially the first time they're investing in precious metals. And it's a big goal of ours to make folks comfortable when they're making this kind of investment and making this kind of decision for themselves.
Money Metals offers all of the offerings that somebody interested in precious metals needs. We provide great pricing, fast delivery. We have a fully integrated storage offering. We provide a loan program for people that want to borrow against their gold and silver for business purposes. We have a monthly purchase plan that allows people to put their investing on autopilot. We advocate for gold and silver public policy around the country. We're the only ones doing that. We're advocating for our customers because we believe in our product and we are aligned with our customers. We're the most prolific publisher of precious metals content in our industry. We are a one-stop shop for precious metals, all under one roof.
No, absolutely. And maybe we'll break this conversation down in 4 topics, like geopolitics, monetary policy, you mentioned commodities and gold, and I threw silver in there as well, and potentially markets. Let's throw the mining stocks of the mining market into the market sentiment as well towards the end. Let's start on geopolitics. And when we last spoke for our year-end review 2023 or an outlook for 24, the Red Sea crisis was at the height of things. Like the Houthis were attacking ships coming through the canal there, and the Middle East situation has not resolved itself. And maybe we'll start there. Like how do you see things developing, or maybe historically looking, like how did things develop in 2024, and what do you see happening in the future? Like how is this going to play out? By the way, this is a big topic, and there's so many follow-up questions. Like I'm trying to start somewhere here, Alasdair.
No, for sure. Well, in 2024, what we saw was the evolution, if you like, of the real hotspot being from Ukraine to the Middle East. And certainly in terms of press reporting, that's the case. I think the press has got rather tired of Ukraine. The other problem is that the Russians are winning in Ukraine. I mean, there's no doubt that they will defeat the Ukrainians. Under Trump, as he comes in, I mean, he said he'll resolve this in a day. I mean, don't believe that at all. He's going to be fighting his own deep state as well as the Russians, who have got the whip hand in any negotiations over Ukraine. So that, I think, is more or less a done deal, though few people in the mainstream media would look at it that way. So the focus has gone very much onto the Middle East. And of course, it's ended up with Syria blowing up, aided by the Americans in particular, and also by the British. But what that means is that Hezbollah has been cut off from Iran. So the situation evolves. I mean, it looks as if Israel is expanding its territory to the north, across the Golan Heights, and will take over some of southern Syria. The Turks will grab what they can in the north, and they will be fighting against the Kurds. The idea that Syria, is sort of now done and dusted and come under control, if you like, of Western interests. Forget it. This is going to be a mess. It's going to be rather like Libya, a complete and utter mess. So I think that's the starting point for the Middle East. BRICS, I think, is going to disappear from the headlines because Russia is no longer chair of the BRICS organization. It's now Brazil. And I think, the work will continue on in the background, I think. But with Brazil as chair, they won't be taking the lead on this work. So I think that BRICS will sort of fade, if you like, as an interest. Other geopolitical factors. Well, Chinese economy is actually in better shape than you would believe from Western journalists. The amazing thing, I wrote an article not so long ago on the Russian economy. Did you know that on a purchasing power parity basis, it's now the fourth largest economy in the world?
I didn't. One thing I learned today, Alasdair, was that they have 23% interest rates. So.
They have 23. Yeah, they've just put them up, have they? They were going to put them up. That I know.
Yeah.
But what's happened there is fascinating because wages have risen quite substantially in Russia. There is a shortage of labor. After decades of not being paid very much, ordinary laborers are now getting decent wages, and they're saving it. And this is why something like 20 to 30% wage inflation is not translating into price inflation. Prices are rising, yes, I think officially around about 8 or 9, maybe 10%, something like that. But the difference is because these guys, for the first time in their lives, are actually saving some of what they earn. And this is, with income tax at 13%, corporation tax at 25%, which is normal, none of the West's crazy regulations. You can see that the private sector in Russia is flourishing. This is why Putin is so popular. Government debt to GDP is less than 20% because the budget still balances despite all the military spending and the war against Ukraine. These are conditions we would dream of in the West. We're the ones going bust, by the way, just to make it absolutely clear. This is actually quite, hope for the future, I think, actually does lie in the Asian hegemons and the Shanghai Cooperation Organization and BRICS and so on and so forth. There is a whole world there which is actually larger than ours, certainly on a purchasing power parity basis and also in terms of population, which is going to thrive. You've got an industrial revolution, which is happening throughout everybody associated with that, which is why so many countries want to be involved with it. But of course, at the same time, they're frightened of what we might do to them, like call in their debts or regime change or whatever how we traditionally manage these countries. So you can see that we're at a sort of bifurcation, if you like. The world is split very definitely into two. But it's going to be quieter on the BRICS side, I think, in 2025 than it has been in 2024. There's a lot of noise going on about, a new trade-backed currency. And Russia had something like 220 meetings, for BRICS countries and also those intending to join BRICS, all around Russia. This is very, very active. So I think that's going to dampen down a bit now. In terms of other geopolitical factors, I think that we are looking at trade, which is now going to trade tariffs are going to be the big problem, I think, in 2025. Assuming that Trump means what he says, that trade is the most beautiful word. And assuming that Scott Bessent is nominated Treasury Secretary, doesn't actually sort of stamp on that. I think I mean, this is actually another point. I mean, in the past, when you look at Smoot-Hawley, for example, Smoot-Hawley was passed by Congress, Senate, and then signed into law by President Hoover in early 1930. This time, what you have is you have Trump basically shooting from the hip on tariffs. I mean, he's going to set the tone, I think, a lot more than the sort of, if you like, the elected politicians. So on that basis, we're going to see, I think, relations between China and America deteriorating. I think when it comes to Russia, there is not going to be an easy solution there, as Trump has told us. That, I mean, basically the Russians control the situation, and their demands are likely to be very simple. They would want to keep on to the Eastern Oblasts, Crimea, have absolutely no doubt that that is Russian, and they would want guarantees, convincing guarantees that the rest of Ukraine will be neutral and not join NATO under any circumstances whatsoever. And I don't think those conditions would be acceptable to even President Trump's deep state. You know, it doesn't. There are these sort of iconoclastic forces in America which just won't listen to reason. So that's how we're going to kick off, I think, on the geopolitics. We'll see how it develops.
Lots going on. And I've asked you before in the record button, the situation in Syria surprised me because it felt like it could have happened any day in the last 3 years. And maybe you can explain it to me a bit, Alasdair, and maybe to our audience as well. Like, why did it happen now? Like, Assad was always like a thorn in everybody's eye or side. But why now? Like, is it just like what's the motivation? Is maybe the question I'm asking here.
I mean, the motivation, I think, is Israel. The Americans support Israel. The Americans have been taking oil out of Syria. I mean, as if it was their own. They've been stealing the oil, if you like, from the state, and that has deprived Assad of revenues. So the country has been limping along, basically financially broken for the last 7, 8 years, 10 years, whatever. And it seems, and you know, this is information which we have to get, if you like, not from the mainstream media, but from alternative sources, which you have to filter really quite carefully. But it does seem that the Americans, if you like, pursuing Israeli desires or policies, have been really at the forefront of organizing the rebellion against the Assads. British intelligence has been in there as well. They basically back the white helmets. The idea that we haven't been involved, I think, is a myth. We have very definitely been a party to this destruction, and rather like we were party to the destruction of Gaddafi. I think the consequences of this are going to be really horrendous for Syria. I just see tribal infighting. I see religious infighting. I mean, the new leader of HTS, who sort of, seems to be assuming the role of president, sort of indicated that he will tolerate other religions. But I understand that his main appointee is an expert in Sharia law. So is this really going to happen? I mean, this is a mess. We don't know how it's going to turn out, other than that it's going to be terrible, absolutely terrible. And
maybe, Alasdair, don't want to talk over you, but I apologize for interrupting. I'm just trying to figure out, is it another proxy war between the US and Russia that is happening there, using Israel as a front? I'm just curious, because Russia has troops in Syria, the US has troops in Syria, Israel's just moved into Syria. Is that just another proxy war? Because the timing seems rather odd.
Yeah, no, I don't think so. I mean, obviously there are Russian interests there, which the Americans will try and get rid of. Particularly the port facilities in the Mediterranean. But I don't see this as something which is, America versus Russia. I really think this is America supporting Israel. I think it's actually no more complex than that. And of course, what they've done is they've cut Hezbollah off from Iran. The next thing, and the deep state will push for this because this is what Israel wants. What Israel wants, the deep state goes for. The next enemy, as far as the Americans are concerned, is Iran. And so, if we see an expansion, if you like, of the problems in the Middle East, I think it's going to very much focus on attacking Iran. But that's very dangerous because of the defense agreements, which I know have yet to be signed between Russia and Iran, but they will be signed. This is, this could actually turn out to be extremely nasty.
It's a developing situation, and it's really interesting because it moves so fast now. So I'm really keeping a close eye on that. You mentioned earlier Russia had the chairmanship of the BRICS, or was assumed leadership of the BRICS last year, or this year for 2024. Well, it's this year, for 2024. How successful were they implementing their policies? Like, if you were to draw a line underneath, say, okay, scorecard, how successful was Russia advancing the BRICS and their agenda alongside or within that?
Yeah, I mean, I think quite a lot of commentators sort of took the view that Russia would immediately change everything and bring in this, that, and the other thing, and we notice huge differences. I think the principal difference, and this is something which obviously, was practical, was instead of trying to integrate a whole new raft of BRICS members, they created an associate membership category, which allows potential members, if you like, people who have expressed an interest in becoming part of BRICS, to, if you like, go into a sort of waiting room while, the integration process for them develops. And this is something which isn't necessarily immediate. I mean, it could take several years. And the idea also that they were going to immediately do away with the dollar, no, that's going to be a long, long process. I mean, it's an evolutionary process, if you like. I mean, it's sort of the idea that the Russians could sort of suddenly change this, I think was actually stopped in 2023. When the Russian embassy in Nairobi floated the idea that, a gold-backed trade settlement currency would be on the agenda in Johannesburg. And it didn't make the cut. Why? China didn't want to, sort of, if you like, upset the world, upset the entire fiat currency system by backing this. India certainly didn't want to do it. India is Keynesian to the core. The idea of going back onto a gold standard, if you like, would limit the Indian government's ability to manage its own economy very substantially. And not only that, but I mean, they've spent all their time trashing their population for being gold friendly. Because as far as they were concerned, these were imports which were completely unnecessary, and without it, India would have had net exports, whatever. I mean, basically they're anti-gold. They're now accumulating gold because they have to. And I think also the other thing which is actually important in terms of BRICS is that the BRICS membership, of course, they talk to each other a lot, at government level and also at central bank level. And I think they're generally agreed that the West's fiat currency system is on its last legs. And that's why these central banks are aggressively accumulating any gold that they can get their hands on.
Bit of a speculative question that just popped into my head. And is India the American Trojan horse in the BRICS?
No, I don't think so. I mean, India is in this position where she trades with the West. She trades also with Asia. She's had long-standing ties with Asia. I mean, going all the way back to partition in 1940, what was it, 46 or whenever it was, 48, I think. They've always, under the Gandhis and all the rest of it, they've always had this closer relationship with the Soviets rather than with the West. So they've had to walk a tightrope, and they're still doing it. And I think the idea that they are a Trojan horse to get into BRICS for America, I think that's not the case at all.
No, No, just an idea. The question, because I know they're buying F-16s from the U.S., for example. So just trying to figure out where the interests lie and whether there's that remote chance. But so I was curious. Just to put a bow around geopolitics 2024, is there a topic that we forgot to discuss, Alasdair? Anything that stood out, or maybe Argentina, Milei? I wouldn't even throw that in the geopolitics bracket, but he clearly stated that he doesn't want to be part of BRICs. So maybe that's why I'm thinking of him. Anything else that stood out to you in 2024 that we haven't covered yet?
Yeah, well, actually, Argentina, I think, is interesting because it's a subject of debate now, I think. I mean, you've got left-wing press in this country saying what a disaster that, this is all turning out to be, and, it's all going to fall apart, whereas actually he's doing rather well. The reason he backed out of BRICS, I think, is quite simple. He would not be able to do what he did, if you like, being part of BRICS. He needed not to have America as enemies. And his advisors very much were, if you're going to stabilize the Argentinian currency, you would basically have to have some sort of currency board arrangement with the dollar. So that's the way I think they were thinking. Also, their debts are very much in dollars. If Milei had gone very much down the BRICS route, the Americans would have pulled the rug out from under him. That was obviously, I think, virtually dead certain. So I think the reasons he backed out of BRICS, I think, were entirely logical and sensible from his point of view. The interesting thing is that people are comparing Milei and his economic policies with America's DOGE, the Department of Government Expenditure. Elon Musk is going to do the same thing, and Vivek Ramaswamy is, these guys are going to cut all the dead wood out of government. I mean, the difference, however, is that after decades of corrupt Peronist rule in Argentina, the wider population in Argentina voted very, very heavily in favor of Milei. And if they had an election today, his majority would probably be even greater. Now, the point I'm trying to make is that, even though I have enormous admiration for Elon Musk, Vivek Ramaswamy I know less about, but it's one thing being a total genius as an entrepreneur in the private sector. It's another thing dealing with bureaucrats in government. And I would say this very, very firmly, and that is that Trump does not have the mandate that Milei had when he was elected to do what he's done. So I don't see America achieving anything like that. And if anything, American policies, I think, in the short term, I mean, over the next 1, 2, possibly even 3 years, would lead to higher budget deficits, not government spending in greater control.
Alasdair, researching or preparing for our interview, I came across Roosevelt's, now I forgot because I wrote it down, and of course, New Deal, Roosevelt's New Deal back in the 30s. And it reminded me of a lot of the first 100 days Trump will be in office, or at least how I envision it. He's going to come in day one, he's going to install his policies and just rip the Band-Aid off, restructure things on day one via executive order. Is that a fair comparison? Do you see something similar happen? Would we have to call it the New Deal or something like that, or Trump's New Deal?
I think it's an interesting one because it could be a good comparison, but not for the reasons that you would think. Because President Hoover, who preceded Roosevelt, was actually a big interventionist. He stuck his oar into everything. So the idea that this New Deal was government is going to, rescue the private sector actually was already being done by his predecessor. So here we have Trump, who's going to try, New Deal and all the rest of it. And he'll be, okay, he's got control over both houses. Yeah, control. But you put that in inverted commas because you've still got congressmen and senators who are all in the pork barrel. they're all banked by, they're all sort of backed by the banks and so on, who pay their election expenses and their campaign expenses and all the rest of it. So what's going to change? I mean, I find it very hard to see what is actually going to change. I mean, politicians in opposition could say all sorts of things, as we've seen in this country. But when they face the reality of government, it's a different story. And I really do think that the comparison with Roosevelt will be valid in the sense that he continued what Hoover was doing in the same way that Trump will continue what Biden was doing.
Well, one could argue the economic situation was worse.
But you see what I mean? I mean, it's not easy to turn this sort of big United States ship of state around on new policy.
Well, but like maybe based on what you said, Alasdair, like that's exactly what Doge is trying to do within 2 years, maybe not 100 days, because back then I think things were a bit simpler and easier, and you didn't have social media judging you every day or every second actually. The economic, like there were some economic differences. The U.S. was in depression, unemployment was high, but based on the conversations we've been having on this channel, like it doesn't sound like we're too far away. Yes, we're maybe a bit doom and gloom here on the channel, trying to prepare and educate people, but the economy was vastly different, wasn't it?
What, in the 30s?
Yeah.
Well,
I don't know. It's like if you were to compare it, it doesn't feel like it, of course. But
well, the big difference was that the dollar was on a gold standard. At $20.67 to the ounce. This time, we are completely fiat. So the devaluation, which occurred in 34, when the dollar was devalued by 40%, is going to happen in the market. And I don't think it'll stop at 40%. But anyway, that's another topic. Other than that, there is a big similarity, and that is that in 1930, early 1930, Hoover signed the Smoot-Hawley Tariff Act into law. And there is no doubt, if you look at the trade history and all the rest of it in the 1930s, that was the big reason for the slump. Now, we also know that, money supply contracted by 40%, but that was banks and everything else going bust as a result of the mismanagement, first by Hoover and then by Roosevelt, of the economic situation. But the real catalyst in this, of course, was Smoot-Hawley. Now, today, I mean, that was, in those days, it was principally to protect farmers and things like that. But what happens when you introduce tariffs like that, say against the European Union, against China? They hit back with their own tariffs or their own restrictions in terms of needed, exports. So, I mean, China has already put a ban list on some of her rare earth exports to America. That's even before Trump's got into office. You're going to see more of that. But the other thing, which is worse, is that in those days, you didn't have these long supply chains. Today you have. And introducing these tariffs basically kills off these supply chains. It's a process which has been continuing actually since COVID, when the whole global supply chain system just sort of came to a halt. But that is a process which will continue, and that will drive America and the rest of the world into a slump. I mean, there are no two ways about it. And here we are sitting, sort of thinking the future is looking rosy. I mean, I read my newspapers and I see what the pundits are saying about the outlook for equities next year and all the rest of it. And they're all saying, they're all sort of saying that things like, well, tech stocks will probably, come off the boil sort of thing. But, the market's going to go higher over the course of the year. Probably not as much as we thought originally. I mean, this is nonsense, complete nonsense. This is a credit bubble. And I tell you what, just like a balloon, it's going pop. And that could be rather sudden. We're already beginning to see this, Kai. I mean, I saw a headline in the Wall Street Journal, I think it was yesterday, that there's been the longest run of falls in the Dow Jones index since 1984 or something. Yeah. 5 days in a row or 6 or 10,
Here,
So
it's like I got some stats here. It's down 8 days in a row. It's the longest losing streak since June 2018. I'm sure there's a few extra days added to that. I don't have the dates. So same with the S&P. 11 consecutive days of more decliners than advancers in the S&P. Ties longest record since 1990.
yeah, there you go. So I think this bubble indeed may be popping, and it's interesting. I'm sure we'll come on to this a bit more. But the FOMC statement yesterday, Powell, tried to sort of say, well, slow down on your ideas about cuts in interest rates in 2025. I mean, for goodness sake, I've been telling people that, bond yields are going to rise. Now, what the Fed does with that, is a separate question. But bond yields are going higher, and they're going to go a lot higher. And, we're beginning to see them break out on the upside again. I mean, certainly, if you look at sterling rates, you've got a double whammy there, because you look at the chart of the long gilts, and they are soaring. The yield is soaring, which means that the price is collapsing. And sterling is also in a very, very sickly position. That is going down south. And I think it won't be terribly long before we see it back down to, well, there'll be a bit of consolidation at 120 to the dollar, then 110. Then I really think, unless this government changes hugely, and I don't see an IMF coming in as they did in the 1970s to tell the government what to do. I think at £1, $1, I could see that happening, and I could see it happening quite quickly too. It's amazing. Once a crisis starts, and particularly if that crisis is the popping of a credit bubble, and this is the largest credit bubble in recorded history, because every previous credit bubble, really from the 1980s, has been stopped from popping basically by pushing the interest rates down hard to the point where the zombies heave a sigh of relief and continue being zombies. The result is that you get an accumulation, if you like, of one bubble into the next bubble, into the next bubble, into the next bubble, so that we're now in the largest credit bubble in history, in recorded history. And when this one collapses, it's going to take out the currencies as well. There is no alternative. I mean, when the tide breaks on this one, what does the Fed do? I mean, basically, it tries to rescue what it can, because it's got a primary duty to rescue the government's finances, which incidentally is in a debt trap. It's got a primary responsibility to rescue the banking system, which will be suffering from all the bad debts in an economy as these zombies get wiped out by higher interest rates. And what are the banks doing? I mean, some of the banks are beginning to see this. So what do? They restrict their lending into the private sector. Or if they agree to lend something to the private sector in terms of providing it with liquidity, then it's going to be at a higher spread over whatever the Fed says, higher rates. So this is going to happen. I mean, there's no two ways about it.
Do you see the bond vigilantes sort of come back and really dictate pricing, and meaning Fed fund interest rate here? Like 4.55% as we speak for the 10-year. It's been rising sharply, as you said. And is the market going to dictate interest rates here? Like give us a term premium?
Yeah, of course. And I mean, you've already got the two largest foreign holders of US Treasuries turning sellers. I mean, you got China isn't buying anymore. She's easing her position out. She's actually selling dollars to buy gold. And the Japanese institutions are in exactly the same position. They've got losses, if you like, on their dollar investments. They may have profits on the exchange rate, but they've got losses on the underlying investments. So they're not going to go and buy things out along the yield curve, that's for sure. I mean, if anything, they'll probably hold on to dollars, but this is a currency game suddenly, and the dollar is the king rat of fiat currencies. It's the it's the least dirty of the lot. And on that basis, whether, when things start going wrong with the dollar, the other currencies are toast. I mean, and that's what the charts are now telling us of sterling very, very clearly. I mean, you call them bond vigilantes. It sort of implies that there are people, deliberately acting in concert to determine the levels at which government funding take place. No, you've got a lot of scared people out there, and they're going to be a lot more scared, and they're not going to buy it. That is the problem. And I think that 5% yield on the 10-year US Treasury is first stop. After that, I see it going considerably higher. And I don't see how it can stop because of the debt trap. And not only that, but because of the trade policies, if they come about, and I'm pretty sure they will, not maybe quite the way in which Trump has said, that will collapse the US economy, the global economy. What then happens to government finances? The deficits just rocket. And the deficits are the primary source of collapsing the purchasing power of a currency. So that's what we've got, I'm afraid, in 2025.
Yeah, no, confidence is slowly eroding here. We've got financial advisors saying 60-40 portfolios are dead. So what do? You sell your bonds, right? You do sell them. I think that's part of the problem, I guess. And I'm interviewing Andy Schechtman here in about an hour as well. That's why I'm thinking of it. Like he keeps saying little by little, then all at once. Yeah. Right, and that's sort of what it feels like. Yeah, exactly. But he keeps saying and using it as well, and I think he even calls his podcast that. So that's what I'm looking at, right? You touched on the Fed. Maybe you throw monetary policy real quick in here as well. Peter Schiff yesterday said, "Well, the Fed's lost the war on inflation." Would you agree with that statement?
Yeah, absolutely. I mean, I don't think they ever, I don't think they were ever winning the war against inflation, really. Because part of the problem, I think, is that the Fed is using interest rates to try and manage economic outcomes. That is not the purpose of interest rates. The purpose of interest rates is to stabilize the exchange rate. So really, it needs to raise rates in order to stabilize the exchange rate. And I'm talking about the exchange rate, the dollar against gold. But of course, they think that gold isn't now part of the monetary system. Their propaganda basically is they've got rid of gold. So they're completely clueless as to what they're doing. But the consequence of the tighter interest rate outlook in America has been to undermine all the other currencies. So, the idea that the Fed actually has control over the situation, I think, is completely wrong.
Well, one statement or comment that Powell made yesterday that I wouldn't say confused me, but I didn't expect it perhaps, is that he said, well, we're taking future policy decisions into consideration, which he didn't say in the past. Like he just is like, well, we focus on the data. That's used to be the answer. Now it's, we got groups working on potential scenarios or future policy scenarios, meaning tariffs, like what we've just discussed. And that was sort of news to me. At least he didn't admit it in the past. He was always said, we're data dependent. Right. So, but based on what we discussed, the tariffs and everything is very inflationary to a degree. Maybe we'll use that as the segue to talk gold and commodities, because everything we've discussed bodes really, really well for commodities, gold and silver in particular. What do you see as critical catalysts in 2025 to drive gold to new highs here? Is there one that stands out, or is it just everything we've discussed and more?
Well, it's very, very simple. It's not gold going up so much. It's more a question of currencies going down. This idea that when you get a recession, inflation disappears is complete nonsense. This is what everybody's been expecting, that we've got a soft economy and the economy is not really growing and therefore inflation's going to disappear. I mean, it's complete nonsense. It doesn't happen like that. You have to understand that inflation as such is not inflation in a sensible definition. I mean, originally the definition of inflation was a monetary thing, not a price thing, for a start. And secondly, it doesn't actually capture what's going on. I mean, what is happening is that the purchasing power of fiat currencies is declining. And part of that has got nothing to do with changes in the quantity of credit in the system. It's got, in these times, it's got a lot more to do with the confidence and the faith in that currency. And so if you look at what the Bank of China's, the People's Bank of China is doing, I mean, this says it all. They've been, you read the press, they've been buying gold. No, they haven't. They've been selling the dollar. So what do they sell the dollar for? They sell it for real legal money, which is still legal money and real money by common law, despite of everything that the Treasury, US Treasury, has been trying to tell us for the last 50 years. So, the Chinese aren't convinced by that propaganda. And they know that with the US in a debt trap, I mean, last time we talked, you sort of questioned, are they really 135% debt to GDP? I mean, the answer is yes. And it's going to get worse because if the economy tanks, if the economy goes down, then that ratio shoots up. And it won't be very long before you see a debt to GDP of 150, 160%. So what do the foreigners do? They just get the hell out of it. And the foreigners own roughly $32 trillion of dollars and financial assets denominated in dollars. So, they're up to their necks in this. And not only that, but they're all the sort of, if you like, the temporary positions that occur in the foreign exchange markets, which according to the Bank of International Settlements adds another 80 trillion or something to the foreign owned total. Exposure to a collapsing currency is absolutely huge. And this informs the deep state, the deep financial state, if you like, in China and Russia. They can see what's going on. And that's why they've told everybody, for goodness sake, protect yourselves, go out and buy some gold. So you've got all the central banks and even the Polish central bank, who are probably sort of listening in, if you like, buying gold. What are they doing? They're actually adjusting their reserves. They're getting out of fiat and they're going into real legal money. And that's a process which is going to continue. And I think so acute is the problem. I mean, the only G7 countries which don't have debt to GDPs of over 100% are Germany, which is where you are at the moment.
62%.
And Canada. Canada's rapidly going downhill, and Germany, unfortunately, is as well as a result.
We're not far behind,
I mean, well, let's not go into that. So, you've got, what have we got in 2025? We've got the potential for these debt traps really to be sprung on major currencies, or the governments that are responsible for major currencies. You've got central banks which are insolvent. I'm not talking about commercial banks. The central banks are insolvent. They're insolvent in the sense that their debts exceed their equity many times over, many times over. Now that can be recapitalized, but you can't recapitalize the ECB. I mean, that's virtually a no-no because it's a two-step process and it requires agreement in multiple jurisdictions at the political level. So, I just can't see that happening. So the euro, could be on the way out. That's a very serious statement. So, I mean, if you're, we referred to the world as sort of split into two halves. You've got the Russian and Chinese interests and all their bits, and you've got the Western alliance. We're the guys who are falling apart. The other lot are okay, but they've got to protect themselves from the fallout of our stupidities. So, they're going to continue to sell our currencies. That's what it boils down to. What do they buy? They buy gold. They might buy some silver. They might buy, whatever. I mean, hang on to needed commodities. Start, building strategic stockpiles. Because at the end of the day, if there is a correlation between gold and anything, it is particularly against a basket of commodities. So that's really what it represents.
Yeah, that sort of fits a Bloomberg Outlook report that just came out today, actually, that they expect gold to appreciate while the other commodities might depreciate in price over the next 12 months based on recessionary fears, looming debt crisis across the globe as well, with gold pretty much the only asset class potentially appreciating in value here next year, going to $3,000 and maybe bouncing there.
Yeah, they've got something which is fundamentally wrong, and that is they think that the dollar is money. So they're looking at gold as an investment. They're speculating that gold will go higher because of demand, whatever. They are not looking. They're not putting into this any credence for the difference between money and credit. They think that the dollar is money. They think that gold is something sort of out there, which perhaps gives you a bit of comfort when things start going wrong. And they see heightened risk. So when there's heightened risk, they think the gold price goes up. What they don't understand is it's their currency going down. And this is the problem actually throughout also the whole of the banking system and derivative markets. And it's, a lot of it's because they have to account in dollars or pounds or euros or whatever their national currency is. So, a good year is one where you've got a profit in pounds or euros or dollars. So you tend not to look at gold other than through these blinkers of your P&L account in fiat currencies. And so people like Bloomberg have got no idea actually what the role of gold is and why it appears to be rising. It's not rising. It's their currencies going down. Now, the moment they start writing on that basis, you could see that the credibility of currencies will start disintegrating quite rapidly. And this is a very, very important point. At some stage, perhaps some of these analysts will begin to realize and put the relationship between credit and real legal money in that context. If they do, then it's going to start undermining the value of fiat currencies even more.
Yeah, they can't. There might be an agenda not to do that, at least yet. Although they let gold run, they is a broad definition of, I don't know who it is, to be honest. But I don't know. Maybe we could speculate on that as well. Like, why did the gold price go to 2,600 with a DEUTSCHE? Let's use the DEUTSCHE. It's a number I'm using at 107.5 today, and gold at 2,600. It seems like there's a disconnect. Dollar seemingly strong. Like seemingly, we discussed it's not. There's a lot of undermining factors there, of course, but like gold is like, and we've discussed this before, Alasdair. I'm sure we have. Like once we broke through 2000, I've had guests on this channel. Like the world should be burning. Like it's not literally burning, but the hotspots are getting bigger. There are more and more hotspots. Things are happening. Like the world would be in crisis, or the U.S. would be burning, literally burning the U.S. That was statements made by guests here on this channel. Like once we break through 2000, the economy is dead and the dollar is dead probably as well. Is that like how? I don't know. I'm trying to phrase a question around it, but are we in that state already? Like, and we don't realize it. Like, there's that famous meme of the dog sitting in the burning house. Is that us? Like, saying everything's fine while everything's burning around us.
Yeah, I wouldn't put it like that. I think you can make it far simpler and just look at the debt trap. If your economy grows more slowly than the increase in your debt, you are technically in a debt trap. And that is the situation in all the major Western economies. I'd even include, unfortunately, Germany in this situation, even though her debt to GDP is relatively good compared with the others. It's still bad at 60 odd. I think that's more than the Maastricht level even. The problem with the debt trap is that there comes a point where foreigners, if you rely on foreigners to finance your debt, even at the margin, when they start running away from you because they fear what's going to happen, then your bond yields just rise and rise and rise. They don't stop at 5%. They don't stop at 10 or 20 or even 30. You get a currency collapse. Now, obviously, if you start seeing, let's get a little bit of context. If you look at the US economy, you've got the 10-year now yielding about 4.5 something percent. Going north is going to hit 5% of that. You just look at the chart and you can see it. So fundamentals might be a matter of opinion. Charts maybe give you, a reasonable grasp of it. At some stage on the way to 5%, or maybe just slightly over 5%, the credit bubble, which has been supporting equity markets, will go pop. Not just equities, but also Bitcoin and all the rest of it. All these bubbles will burst. Now, what we don't know ahead of the event is how rapidly this is likely to happen. My view is that it could happen very rapidly because of the continuing bullishness in the market. And I don't mean bullishness in the sense that everybody in equities is absolutely gung-ho, whatever, but they've misread the interest rate situation so badly. And this is the point behind last night's statement. They can see, the Fed can see, that it has over-egged the anticipation of lower interest rates, and it's got to dampen it down because it can see that it cannot lower interest rates as much as the market is expecting. When the market understands this, you will find that equities are wildly overvalued on any historic basis compared with the yield in US Treasuries. And I've put out a chart on this before. We are currently, equities are twice as overvalued compared with bonds as they were in the dot-com bubble. Now, just think about that for a moment. The dot-com bubble exhibited all the traits that you would have read about in Charles Mackay's, book about bubbles, the extraordinary madness and delusions, and all the rest of it. I remember I was sort of just broking. I was beginning to advise banks in Guernsey, and I remember trying to get hold of my dealers back in London. You couldn't get hold of them. They were so busy with buyers coming in. And I was also doing corporate finance. The people who were coming out of the woodwork trying to, get themselves listed and all the rest of it. It was frenetic. It was just like Charles Mackay described the top of every bubble. That was the year 2000, the beginning of 2000. We are twice as overvalued compared with bonds today in equities as we were then. Twice as overvalued. This is a mega bubble. And once it pops, I think the consequences are likely to be very rapid and very, very severe. So that's the first thing. If we see yields on that US Treasury approach or maybe touch or go slightly beyond 5%, that bubble's going to really pop. It may have started already. What that does is it undermines the value of collateral for the banking system. We've already got the problems in the commercial real estate market. There will be knock-on problems when it comes to residential property because mortgage rates will go up. Now, it's a slightly complex situation in America with Freddie and Fannie and all those agencies. But I can tell you that in the UK, in countries like Sweden, where I visited the central bank earlier this year, we were talking about this. There are populations who are highly dependent on low mortgage rates, and that is going to disappear. It's going to be catastrophic as far as family finances are concerned in Europe. So, Germany is a bit of an exception in this one because of your rental markets, but other countries, they don't like rental markets. The politicians think they're terrible. They think they're landlords ripping off, ordinary people and all the rest of it. So the result is, and I found this particularly in Sweden, it's also true in this country now, they've discouraged the development of a rental market. So everybody's been forced. If you want a roof over your head, you have to go and buy a house, which means you go up to there in debt in order to do it. and prices are unnecessarily high, that's going to come tumbling down. So you can see that the whole of the collateral side in a collapsing bubble is actually where the danger lies, because you're going to get foreclosures, you're going to get businesses going bust, you're going to get banks sort of saying, well, hold on a minute, we are no longer covered here. We're going to have to get more collateral in, or else we've got to liquidate the position. So, it's all this 1930s stuff, which Irving Fisher, first identified in a paper written, I think, in the early 30s. So you can see that this collapsing credit bubble isn't just an inconvenience for investors. It's actually very destructive for the basic economies. And so this, I'm afraid, is the outlook. Now, how do you protect yourself? You just get the hell out of credit. This is what I've been, the message I've been trying to get to everybody. What is credit? Credit is, obviously equities. I mean, equities are credit. People think they're not. The reason they're credit is that the management has an obligation, which is a debt, to you as a shareholder to deliver an income stream. That is credit. It's not, defined, if you like, in an agreement between, say, a bondholder and a borrower, but it is nonetheless credit. Everything is credit. And when that goes, this is very bad news. The only thing which is really going to be left standing is real money, which is gold. And to a lesser extent, because it's not monetized, is silver. And also, if you go back in history, not too far away, and I remember copper in the coins. So, this is real money, and nobody's got it. I mean, and what amazes me, Kai, is that in Germany, which has had 2 currency collapses in the last century, the interest in gold is about that, physical gold.
It's a very small select market that focuses on gold, and we see it at our conference, and you've been to our conference, Alasdair, as well. It's not a mass market product, no.
No. But I mean, you would think, Germany in the past learned the lesson the hard way of, that certainly in the early 1920s and also following the Second World War when, the mark collapsed completely. They learned this, and your government actually accumulated gold, which of course the Fed, the New York Fed seemed to have stolen. But, it just amazes me that, Germany, the German nation as a whole. I mean, you just look at the ETF interests, the buyers and sellers of ETFs. Germany is not there at all.
No.
Nor is France.
No, Europe is a net seller. Europe is a net seller of gold ETFs. Yeah. Which is absolutely puzzling. Maybe it is, and we have to cut here at some point, Alasdair, but maybe it is just because of our economical situation. We are officially in a recession. Maybe we can't maybe we just can't afford to do it. Maybe we just can't afford to buy it. I have no idea. I'm running out of excuses and ideas of why that is the case. Maybe it is a difference in economic situation, and that we don't understand.
I think the ECB has got a lot to do with it. I think they've been very successful promoting their currency as an alternative to the real stuff. But that's going to fall apart because, virtually all the national central banks are in negative equity. The ECB is in negative equity. It cannot support individual governments. Apart from Draghi's, whatever it takes. But if you've got the dollar going down, just look at the chart of the euro against the dollar. If you've got the dollar going up against currencies, going down against gold, there's only one thing that anyone living under the euro should do, and that's buy gold, because you've got to get out of that credit. To get out of credit.
And gold is trading at record highs in euros and other currencies against the US dollar. Yeah, but
this is the mistake. So. This is the mistake. People think, oh, I've missed it. It's gone up. So forget it. That's not the point. It's your currency going down. It's not gold going up. Gold is just over the millennia. It just goes like that. It just goes along. I had a look at Diocletian's Edict of Maximum Prices, which was 305 AD, round about, give or take a year. And there are quite a lot of things in there which are priced exactly the same as they are today. in gold, because he put in the relationship between gold and silver, which incidentally was a gold-silver ratio of 12, for those that are interested.
That's another rabbit hole there, Alasdair.
Another rabbit hole. But you can see how things don't change that much if you're talking about real legal money compared with credit. And if you look at the dollar, it was 20.67 before Roosevelt decided to devalue the dollar, 20.67. So it's lost over, at current prices at over 2,600, it's lost over 99% of its purchasing power. That's what fiat currencies do. But sometimes the acceleration is so destructive that people just got to get the hell out of that credit and get into the real stuff.
Alasdair, sadly, we have to wrap it up here. This is probably the longest episode already we've done in 2024. But it was so informative, and I hate stopping people when they're on a roll, and you definitely were in the last 15 minutes, Alasdair. I really appreciate that, and my earpiece just fell out. I tremendously appreciate you joining us. There's so much wealth and knowledge also in your Substack. It's macleodfinance.substack.com. Is that correct, Alasdair?
Yeah, I think if you Google it, you'll get to me. The link is actually alasdairmacleod.substack.com, but you needed to know how to spell my name. You got it spelled correctly on.
Because you put it in. I often make the mistake, and it's a pet peeve.
Together, .substack.com, and you get there.
Fantastic. Alasdair, I really, really appreciate it. Merry Christmas. All the best for 2025. Let's hope it plays out as we want it to, whatever that means, to be quite honest, because there's a lot of different scenarios, and I hope it's not too painful for everybody, quite honestly, because it feels like the urgency is picking up, like I said, so it is getting more urgent out there. Alasdair, thank you so much, and everybody else, thank you so much for tuning in. I hope you enjoyed this conversation here with Alasdair, recapping 2024 and, of course, trying to give an outlook in 2025. I hope we did a good job at it. If we did, hit that like button, hit that subscribe button. It's a free way to support this channel, get Alasdair on more frequently, or at least quarterly and regularly here as well. And we just want to hear from you. It helps us out tremendously. Thank you so much for tuning in. All the best. Merry Christmas. Happy New Year. We'll talk soon. Thank you so much.